Welcome back. Commodity names are moving up. Hindalco is now the top gainer, up close to about 4%. JSW Steel, 2.7% higher. Tata Steel, too, rallying more than 2%. But let's get to our Midcap Spotlight segment. Vahishta is here, and she's going to tell us about Siyaram Silk. Vahishta?
Hi, Reema. Thanks for that. Well, Siyaram Silk Mills had reported their numbers, and it's been an all-round beat on the performance, which is led by a better product mix. The revenues were up 33% on year-on-year basis, while the margins have also jumped to 18.9% in this quarter. Now, this was led by the domestic market demand, which remains buoyant at present, and there's an increasing traction even from the exports market. The volumes have grown double digits, while there's been a robust growth in realizations, which was led by premiumization. Now, for the fabric business, in the first half of the ongoing financial year, the revenues were up 30% to 736 crores, while the share of fabrics in the total revenue has slipped to 70%, versus 77% on a year-on-year basis. There's also been strong demand revival in Tier 2 and 3 cities. While for the apparels business in the first half of the ongoing financial year, the revenues were up 92% on a year-on-year basis, which comes to 216 crores. The share of apparels in the total revenue has grown to 21% versus 15% on a year-on-year basis. So there will be new brands and designs which have helped to demonstrate the good performance in this segment. Both the trade and retail have witnessed encouraging trends, which is led by higher secondary sales and strong retail footfalls in the multi-brand outlets. The board has also approved a 200% dividend of 4 rupees per share, and the record date for dividend will be November 14th.
Thank you very much for that. Let's also talk about Rainbow Children's Medicare. That's posted a strong Q2. Ekta is here with the details.
Thanks for that. Well, yes, definitely a strong performance which is coming for Rainbow. Revenue up around 18% year-on-year, EBITDA up around over 20%. Margins have improved to 35 versus 33.5%, and a profit which is up 35% year-on-year. Similarly, Q-on-Q as well, the performance stood out. So revenue up 32%, margins stable as well, and a profit growth of around 60%. A couple of important statistics. Occupancy has improved to over 62% for the quarter gone by. This is better than 46.6% same time last year and 43% in Q1. Average revenue per occupied bed has also improved all the way to actually dipped to around 46,959 rupees. Now, the company did say that they would focus on the quality of business than occupancy rates. The expectation is that occupancy this quarter was impacted because of an aberration due to too many virals taking place amongst children, and hence we saw occupancies rise. Average revenue per occupied bed, in fact, reduced because of the case mix. So they expect these kind of parameters to normalize going forward. They have also started a new facility in Chennai, and they have said that they have managed to see a good amount of occupancy within the Chennai facility. They do have operations in other sectors as well, such as Delhi, and they have also operationally broken even on that one. The stock itself has done quite well. It's up over 40% from its issue price of over 500 odd rupees. So the street likes the numbers, especially the margins and the occupancy this quarter.
Thank you very much for that. Earlier today, we had a chat with Ramesh Kancharla, the chairman and MD of the company. He spoke about the company's operating metrics, occupancy rates. Listen in.
We have come back into the business. All the operating metrics are pretty good. And as we see in future, we're confident that what we are able to deliver in the next 2 quarters, the overall year goes up, would go well. Even in the occupancy is about 55% also. What's important is what the quality of the business we do. So in the current quarter, that we had a lot of seasonality business, which is why even our average occupancy, average revenue per occupied bed is perhaps lower compared to the normal quarters. So question here is that with the quality business versus occupancies, I would always go for the quality of business and not too much focus on the occupancies. Chennai is the geography where we are pretty bullish about it, because the Rainbow established excellent reputation in Chennai city, and our hub hospital, though it's a 3-year-old, is doing extremely well. And in the first month itself, we tracked very good numbers in Chennai new facilities.
With that, out of time on Midcap Radar. Thank you for watching. Your stocks when we return.